Good morning, guys. Welcome to Baby Trader Forex Community. Hope we are good. Okay, so let's start upload. Today we are going to talk about the trend and how to mark with its structure so we can trade well without issues. Okay, so like we always know, you're always told make the trend your friend. Make the trend your friend. Like the trend is always your friend. So like I told us last week in our introduction section, I told us the market moves in three phases. The ranging market, which is price bounds, the bullish market, which gives you impulses to the upside, impulse correction, impulse correction, impulse correction, impulse. Then the bearish market, which gives you the downward movements, impulse, little correction, impulse, little correction, like that. So how do we identify the trend we are in and how do we trade it? So let's talk about structure now. So like my boss would say, always make the trend your friend. So let's say you come to the market now and you saw a bullish push. How do you identify it? Now let's say we have the origin here as point A. Let's say origin is A. So anytime market, let's say market now was bearish a little, getting to point A, you saw your reversal candles and you had this push to the upside. Sorry, market came down to point A and gave a nice push to the upside, yeah? So in as much as markets gave you some of all those candlesticks at point A, those four candles, you saw either of them here, and you saw a nice push. Then the market continued, gave a little correction as an impulsive push, gave a correction that didn't come back to this origin, went up again, gave a correction, went up, till the last corrections leg is taken, the trend is still bullish. What do I mean? You have this as your first correction leg. You have this as your second correction leg. This is the mechanical approach of market structure mapping. So till you get a full candle close below here, the trend is still bullish. Like this is the origin, impulsive push, correction, impulsive push, correction. So this is an example of a bullish market. In the next video, we'll talk about point of interest and how to engage it. Then for the bearish structure, let's say the market now dropped from origin now, dropped below, correction, impulse again, correction, impulse again, correction, impulse. In as much as the market is still below the origin point A, just have an impulsive push to the downside, correction, impulse, correction, impulse, correction. You are in a bearish market. And take note of the length. Take note of the length. You can see the correction leg is always smaller compared to the length of the impulsive push. What do I mean? If you check bullish, so if you check this leg now, we had this first push, which was around okay, that was good. That was around 120 pips for the first push. That's the impulsive push. The correction now, check. That's good. 50 pips, okay, 60 pips. Half the length of the impulsive push. Then check the next correction again. How many pips do we have there? The impulsive push here again give us a good 100 pips. The correction, how many? The correction, how many pips? 60. Then you have the next impulsive sell again. How many pips? With close to 100. This is just for assumption sake. Then check the correction leg, 70. So to identify your trend, you need to have this impulsive move that's a little bulky, like more of that same color candles to that side. A little correction. Nice impulsive push again. Little correction. Nice impulsive push. Then a little correction. So this is how you identify, or this is how you mark your structure clearly. The impulsive push should be longer than the correction. Impulse here, a little correction. Impulse here, a little correction. Impulse again, a little correction. Then for the bullish bias, same thing. Same thing applies. Impulsive push, a little correction. Impulsive push again, little correction. Impulsive push. So that's how you map structure. Then how do we engage? What do we trade? You just look for two impulses. Look for two impulses and engage. Because two impulses validate the trend. What do I mean? You need an impulsive push, correction, impulsive push. In as much as you've seen two impulse, correction, impulse, the trend is valid. You look for your candles and you engage. For the selling market, the same thing. Impulsive push, correction leg, impulse. Once you can see a clear impulse, small correction, impulse, the trend is valid already. The next thing you do is to look for your candles out of those four candles and engage. So in the next video, we'll talk about point of interest, what it means, and how best to engage. So summary of this class again, we have three market phases: consolidating market of the ranging market price band, bullish market, where market tends to rise up, giving you push to the upside. More green candles are seen in that zone, or more upward candles are seen in that zone. You have the bearish market, where it's characterized by more red candles. Then a push to the downside. Then how do you measure, or how do you confirm or validate your trend? Let's say you have this point A, market came down to point A, gave you your rejection candles, and gave you a nice impulsive push to the upside. Give a little correction, let's say half length in the first impulsive push. Then the next impulsive push, little correction, impulsive push. That is a bullish market. That is a bullish market. Sorry, I wanted to write it. Don't know what that means. That's a bullish market. Okay, sorry, let's let it go. That's a bullish market. Then for your bearish market setting, the market now drops below the origin. Impulsive push, correction, impulse, correction, impulse, little correction, impulse. In as much as the impulsive push is longer in length compared to a smaller correction, impulse here, small correction, impulse here again, small correction, the trend is clearly bearish. Then what do? You need just two moves to identify your trend, which is your impulsive push, correction, impulse again, then you engage. Impulsive push, correction, impulse again. You look for either of those four candles and engage. So we'll talk more on trend tomorrow or our next video. Then we'll still talk about how to engage using the point of entry, which is those our four special candles. All right, guys, stay tuned and anticipate next video.